The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Happy Friday. Good morning, everybody. I'm Tommy O'Brien coming to you live from TFNN just after 9 o'clock this morning, folks. And we got a lot of action going on in the markets. We got the NASDAQ right now. NASDAQ 100 only negative by about 62 points, folks. And boy, you talk about some action last night with Amazon to the downside. Apple's reclaimed those losses actually to the upside right now, but Amazon going to look to open in double digits, and we're going to kick it off with Amazon, man. At $96, you spiked to 87. You see the action. The conference call begins at about 5:30. We're kind of right where we were right then. You spiked to 87, though, folks, from 112. You were down $14. What is that, 12, 13% right now to the downside for Amazon. That's after this thing's already gotten pretty pummeled. You take a look at the 3-year weekly, and folks, you are almost back to the COVID lows, man. That bar on the low, 97.85. We're into it, folks. 96.14 on Amazon. But guess what? This market's barely in the red right now. It's something like that. And the numbers they posted, you got Apple up by 70 cents, okay? Apple going to open at about 145, right where it was at in the close yesterday. You take a look at the volatility on Apple, though. Out of the gate, a little bit dicey. They missed on services. That would be the scary thing on services for Apple. That's one of the more reliable recurring revenues on services. They sold a lot of Macs, though. Missed on the iPhones a bit, but nonetheless, they're higher. They're the biggest company in the world this morning, and they stay there from last night. S&P's negative by 2. I mean, look at the action, folks, this week. If you think about it, right, if I said to you that we're going to get numbers when we come into Tuesday for for Microsoft and Google on Tuesday, okay? You got Meta on Wednesday. We now get Amazon and Apple on Thursday. Pretty bad earnings overall when you look at those companies. Microsoft and Google both escalated lower. Look where they were. They were at 252. Microsoft, it's at 225. This is just from Tuesday. Google was at 105. It's at 92. Meta was at 142. It was at 130 when you came into the earnings. You're at 100. 130 down to 100. You jump over to Amazon. You were at 111. You're at 96. And meanwhile, we got the S&P that was at a price point coming into those numbers of 38.71. And yeah, we've given up 50 or 60 points. But boy, I just showed you the percentages on the big stocks out there. Things could be a lot more dire. And it hasn't spread just yet. And we'll see if it does. We got some action in currencies. We got crude with an 89 handle yesterday from an 82 to kick off the week. We're at 88.11 right now for crude. We got the gold index, gold contract, down $15 at 16.50. We were below 16.45. Let's jump over to the dollar index this morning. Got a little bit of strength in the dollar, up to a 111 pre-market. We were just almost at that price point at 8.45 this morning. Dollar backing off a bit, though. We were just almost at 111 at 8.45, folks, and we're at 110.55. Just that quick in the dollar index. We jump over to the euro. Euro US dollar, right near parity, 99.84. We jump to the pound. Pound US dollar this morning, pushing 115.72. US dollar yen, 147.50. That's just continued strength. That's quite a green bar on the yen. That is yen weakness. That is dollar strength. That's always going to weigh on the contract of gold and some of the commodities. Gold down $15 this morning. And we jump to notes and bonds. And what do we got, folks? We got lower price and higher yield. Lower price and higher yield coming back. We only got to a 236. That's where we got to basically of this full run. I've been talking about it, that the 382, and we still might get there, man. The 382, folks, is you're still talking about almost 3 full points from where we're at right now, and that would just be a 382 of this entire move we've had since the beginning of August. And right now you're talking about 10-year yields back above 4%, barely, but at 4.01%. And we jump over to the VIX this morning. Volatility index, pretty remarkable what's happened this week and what's happened to the VIX, man. If you told me again that all the tech stocks were going to disappoint, and I'm exaggerating, okay? Apple didn't disappoint. They're higher today. They did disappoint on services, though. Okay, so they weren't bang out quarters, even if they held on to what they had. I mean, we got some winners out there, man. The oil stocks are just all trading higher. Let's jump over to them today as they're out with their numbers. ExxonMobil, you're going to open at 109.70. That's pushing the highs that we had. Yes, that's yesterday's bar. You close at 107.55. There's the volatility for ExxonMobil. Chevron up to 181.15. Good time to be selling gasoline and crude. Yeah, you think that they can't do anything, folks? They're taking so much money to the bottom line, man, these stocks. And S&Ps, though, we're inching back towards flat. And let's jump over to the big story of the day. It's going to be Amazon, man. See how Amazon trades. They're talking about in the den. Does Amazon get back to 100? You're already up about $10 from that spike low, man. And listen, these were 15-minute bars, folks, okay? So for 15 minutes, almost 30 to 45 minutes. That's a 4 o'clock bar. Amazon was out quick. They accelerate lower to 87.59. And you can see for 15 minutes, for a half hour, you were at 90, right? And the next hour, you made to 94. Half hour, you made to 94. The next half hour, you made it to 96. And then that's where we've chopped around. So it did spend, it wasn't like a 1 minute spike, right? You see those spikes occasionally, like on Apple. We got that 1 minute spike down to 136 when the numbers came out, and it was back there in a heartbeat, some volatility. But those are spikes, okay? Amazon had a little decent time action down there. Now, yeah, they're 15-minute bars, but there was some trading going on, man. Look at, we got 4.7 million shares traded on a 15-minute bar at 4:30. We got 5.3 million shares traded at $90 down there. Maybe people saying, hey, $20 is a little bit too much, even for a company like Amazon, and the wave they missed. And folks, they missed pretty dramatically, okay? And they missed, when you're talking about revenue, man, whoo-wee. Now, they're talking about they're going to have a tough holiday quarter, okay? First, let's look at the revenue for the current quarter they report, okay? They report $127.1 billion versus $127.46, slightly under that number. They do return to profitability, okay? But here's the kicker, folks. They expect fourth quarter revenue between $140 and $148 billion, and the market was looking for about $156. Yeah. If they come in the lower end, they're going to miss $16 billion of revenue over 90 days. The numbers are pretty amazing when they're dealing with those types of numbers, but nonetheless, that's the analysis. And yeah, there were numbers all over the place. They added to the workforce, I think they got about 1.5 million workers now. Expenses were up in there. We'll talk a little bit about it more as we get back. Operating income at Amazon fell by almost half from a year earlier to $2.53 billion from $4.85. They had a couple quarters where they were losing money, I think, though, in there. You have cloud still growing, but not where they were, and expenses a problem as well. So, yeah, that's a tough miss, man, when you're looking for overall revenue, because remember, folks, Amazon, and still, Amazon is not going to be Walmart, folks, where you're pushing that type of revenue and you're not making money on it. Yeah, on the retail side, they're struggling a bit, but they have a lot more going on with that. And AWS, the margins are just through the roof. And I imagine that's not going to stop anytime soon, even if they're taking a little bit of a hiccup in the process of getting over some pretty interesting times that we're living in right now. You jump over to the Analyze tab, you jump down to the fundamentals, you're talking about Amazon under $1 trillion, folks. Amazing how many companies have escalated below that price level. Amazon looking to open right now. At about $984 billion market cap for Amazon shares. It's going to be an interesting one. We got 15 minutes until the opening bell. We got S&Ps negative by 2, but catching a little bit of a bid this morning. I mean, look how we charged back, folks. We're 56 points above the lows we had last night already. It's going to be an interesting Friday as usual. Stay tuned, folks. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got the S&Ps negative by 5 right now, trading at 38.14, but you can see that acceleration right out of the gate at 4 o'clock last night. Now, remember, we got Apple trading spike low on that, but that was Amazon trading down about 20%, folks, bringing down some other equities as well. You trade down to 37.60. We were back to about 3,800 by 6 p.m. Eastern time last night. We're trading right now 15 points above that level, though, at 38.16 on the S&Ps. What else we got this morning? As if we don't have enough going on. It's a big week, folks. Pretty remarkable how we've survived it, I would say, considering everything going on, the numbers we got from the biggest companies in the world and the biggest companies on the index, and the market doesn't blink, man. What do we get today? We get the PCE, key inflation gauge for the Fed, rose 0.5% in September, pretty much in line with expectations, which is what you got to know. Core, the core number, personal consumption expenditure increased 0.5% from the previous month, and that is up 5.1% over the past 12 months. Now, here's part that I pause on because it doesn't even make sense, right? The monthly gain was in line, but the annual increase was slightly below the forecast. Folks, we knew last month. Was there a revision? There might have been a revision. Somebody tell me if the den. Can you make sense of that? Can anyone make sense of that in the den, how the monthly is on pace when we're getting monthly data? And all you do is you take that last month and you add it to the 11 previous and you get the year. But nonetheless, somehow the year is off of 5.2. Pretty close to in line, though, especially when you think about the misses that we've had recently, okay? Especially to the upside when you're talking about consumer prices. If you include food and energy, PCE inflation rose 0.3% for the month and 6.2% on a yearly basis. That was the same as in August. And that all, of course, comes ahead of the Fed's meeting next week, folks. You got enough on your plate right now? We got a Fed meeting. First and second, we got an announcement Wednesday, 2 o'clock, press conference, 2:30, 75 basis points coming at you, man. But what is Chairman Powell going to say? I imagine he'll get some questions about the reporting and just he won't comment on the reporting, I'm sure, but he can comment on the prospectus of if they're considering pausing. What's going to be the language? Are they going to be talking about lag? That's what's saving this market to a certain degree right now, in my opinion. That's what's causing some of the currency action, some of the yield action. But nonetheless, we'll see how it comes out, and that comes Wednesday, man. So we're coming into Friday. We're digesting some tough earnings. Market opens in about 9 minutes, man. We got Amazon down some pretty fantastic territory in terms of 12, 13% on their number. Now, folks, Amazon did have an $8 move priced in either direction, okay? So the market was expecting some volatility, man. That is quite a move for a $1 trillion corporation. All right, to put that in context, Apple's volatility, no, you were only talking about 4 to 5% was the volatility priced into Apple. Now, these numbers don't move yet because the options really haven't opened since till 9:30, but you see the volatility priced in, okay, and we have Amazon down, what, about $14? So the market was pricing in 8. It's down 14. Not insane. Okay, it looks insane because the demise has been so spectacular, but maybe this is the capitulation you finally need, man. As Amazon, that's a revenue miss, and that's a big one. And they're going to be in trouble in the holiday quarter, folks. That second Prime sale, pay attention, folks. I should have been paying attention. I was. You're talking about it. But it was on the wall, man. And I am an Amazon bull in the long run, for sure. But it's on the wall when they are pumping out Prime sales every 3 months like nothing, and I still got products from the last Prime sale that I haven't fully set up and used, and they're pushing out new Prime sales. And what do you do when you do that, folks? You diminish the value of every sale you do, right? Amazon had one Prime Day. Everybody got worked up, man. It's once a year. This is it. Then they had two. Two's okay. Now they got one every couple months. They were deep in inventory, man. They had a problem, and I imagine there were a lot of people like myself that when that second, and it wasn't a Prime Day sale, right? What was it? It was an early access sale or something like that. Their marketing team came up. And again, folks, I'm an Amazon bull in the long run. If you liked it at 110 yesterday, you're going to love it at 96 today. I half kid, okay? I pretty much kid. I fully kid because they're in some trouble right now in the short term. But in the long term, folks, there's nothing like that company the way they get it done. They talked about some of the costs having to do with marketing. Some of the content on Prime, Thursday Night Football, which is costing them $1 billion a game, and they're marketing that. But yeah, I've also been talking about, man, they're paying $1 billion a year, not a game, a year for Thursday Night Football, and the potential that they will be able to reap from advertising versus a company like CBS when you're watching on TV, folks, the world is getting changed in pretty dramatic fashion, and it's not going to be long until we're watching live sports on our TV, and we're getting ads that we can click on right in the television. And those ads, when Amazon has it, I can't wait to see if it's coming down the line, folks, in terms of how targeted, right? Because I was saying, what would a company like Procter & Gamble pay to only hit up customers that are in that small window that you might be reordering products that you've ordered from Amazon? They got the data, man. You know, what would you pay if you knew that somebody ordered detergent 2 months ago and they have consistently ordered detergent every 2 to 3 months on Amazon over a period of a year or two? You know they're right there. They need it. They show the ad. You can see the capability. So they're spending a lot of money in the future, though. You know, even at where they are on revenue, there's nothing like that company, folks, and pay attention to it. You know, we've all been accustomed to Amazon's service, and nobody can compete with them right now, man. I've talked about it, whether it's Walmart, and Walmart probably has value right now too, okay? But they can't compete. They can't get it done. Boxes show up from Walmart. They show up from Sam's. They look like they've been run through some type of recycling process, or they're beat up, they're dirty, the tape is ripped, they're used boxes. I got no problem with used boxes, man, but they just look like they've been beat up. The product sometimes beat up from Sam's. It's not the same process, and those companies are trying to compete. And Amazon is going to be a bellwether for the holiday season for many, I imagine, folks. They're having trouble selling their inventory. They're having trouble selling off the inventory they had with the early access sale. And that's going to contribute to a tough holiday season as we're all dealing with inflationary costs across the board. Amazon, though, don't count it out, man. Look at that. We're already $10 off of where we were last night, man. And boy, yeah, look at this. We're above 98. We ever get above 100, man. Watch out as this thing's flirting right with about $1 trillion. And we got the S&P positive, and we got the NASDAQ 100. I have to chuckle. NASDAQ 100 is down 19 points, folks. You're 300 points off of the lows of last night. Amazon's going to open down double digits, and the NASDAQ 100 is barely in the red. We live in very interesting times. Now, what's catching a bid here? Apple. Apple's up about $2 right now. We'll talk about Apple earnings when we get back. We'll break it down. Services revenue was a miss, but they're selling a lot of Macs, man. They beat on Macs in a big way. I'm not so sure that's where the company wants to go in the future, but nonetheless, that's where their numbers go. And we got the S&P right now flat. Let's jump around to some of the currencies, see if we have anything going on right now. You got the dollar at about 110.70, volatility continuing. The VIX, though, 26.92. It's been a one-way trip down for the VIX as the market has continued to miss on the biggest of earnings. Now, there are other stories out there, and we're going to talk about them when we get back as well. How about Pinterest, man? Don't count them out. You're going to open up double digits for Pinterest shares. You check out the 3-year weekly, right? Maybe that's the bid they finally need, man. This thing's been chopping around from 20 to 30 the better part of this year, down from 80 to 90 at the top of the beginning of last year. And yeah, we're going to catch a bid by about $2, $2.50 for Pinterest shares this morning, not to mention those crude oil stocks trading higher in a big way with Exxon up a couple bucks. And look at that chart, man. How about Exxon going to be above 110? Not a bad time, folks. I wonder why those prices are high. That's part of it, man. Stay tuned. S&P's up by 2. NASDAQ 100 down by 13. We'll be right back, folks.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We have the S&Ps. We open in positive territory. NASDAQ 100, we're only down by single digits right now. You see the volatility last night on the Amazon numbers, the Apple numbers. You see the volatility on the CPI this morning. We just got above that number, 11,234. We got green across the board, folks. Green across the board. Let's check in on Amazon. I imagine not green. We almost got 100 out of the gate, man. Remarkable. Yeah, not much more to say than that, man. That is some strength, folks. When you can charge from 87, you're still down 10%, man. You're well beyond the move on Amazon, but that's quite a clawback in the whole market. NASDAQ 100 in particular. Let's see how Apple's getting a bit, I imagine. There you go. Up by $5, up 3.5%. The market likes Apple. And let's jump over to Apple, breaking down their numbers a bit. Beats, but comes up light on iPhone sales and services. Isn't services supposed to be the future, man? Not the future, right? They have cloud as well. They're way behind. But when you get into it, and there's so many areas that you could break down for this business. Revenue, they beat. Up 8.1% year over year, 90+ billion. Market was looking for just shy of 89 billion. iPhone revenue, though, right? I mean, that's always a big deal, obviously. When iPhone revenue, almost half of the revenue of the entire company, 42.6 versus 43.2, but there you go. Selling computers, man. Mac revenue, 11.5 versus 9.36. Folks, percentage-wise, yeah, what is that? That's 2.15 billion. 2.15 billion is 22 or 23% beat in terms of what they're selling from Mac revenue. iPad, they miss. Other products, 9.65, that's going to include your iWatches, that's going to include the AirPods, your earphones. But services, pretty spectacular miss, man. Almost by $1 billion. Gross margins, right in line, though. That's what the market probably likes as well. You beat on revenue, you beat on margins, man. And services, I guess they're willing to write that one off for the time being as Apple charges higher in a big way. They increased the revenue 8% during the quarter. It would have grown double digits if not for the strong dollar. Yeah, they had a dollar hit in there, I think to the tune, maybe they said $5 billion somewhere, I think I saw. Maybe that was them, might have been Amazon as well. But yeah, services growth, just under 5% growth during the quarter, a significant slowdown versus last quarter, which was 12%. So I'm kind of surprised that on services, which is supposed to be a real growing area, an area of high margins for them, that they're not getting punished more. But nonetheless, I guess when you compare it to what's happened at Microsoft, Google, Meta, and Amazon, pretty strong numbers overall. Yeah, and they just raised all the prices for a bunch of their products. I don't know if you saw that. Yeah, and Mac sales, the one bright spot. I guess many, but so those are the numbers for Apple, and the market takes it and runs with it. Look at this thing, man. NASDAQ 100 up by 37. What's Amazon doing? 99.70 for Amazon. Let's see how Tesla's trading this morning as Elon Musk takes over at Twitter. Is Twitter even trading right now? No, they're done. They're not trading. Yeah. So what was the final print? You could have got it. You're getting $54.20, man. And all day yesterday, you could have got this thing at $54 or less. I kid. Probably not worth the risk, folks. Because what does this thing go down to if that deal doesn't happen? It's already happened, all right? But when you look at 20 cents, you look at something like that, and they were talking about it with Tiger's Den, in the Tiger's Den earlier in the year. But yeah, when did this happen? This had to happen here, right? That's when Elon first came about, I'm guessing. You got the quick boost from 32 to 38, and then they actually made the offer. He shot up this to 46 to 54, 57. Not sure who was accelerating that above the 54.20 price. Imagine somebody bought it back in April, man, above 54.20 and actually lost money after this deal got done to some degree. But markets, they become irrational at times, just like today maybe, where the NASDAQ 100's up 52 points and Amazon is getting pummeled. But guess what? Apple's the biggest company in the world, man, and they're trading up pretty spectacularly. So Amazon's getting a lot of the headlines because the percentages, but Apple may end the day with the headlines the way we're trading right now, with the Dow up 268, Russell up by 13, NASDAQ 100 up by 43, and the S&P up by 16. But yeah, for some context here, okay? On March 14th, the week of, Twitter was trading at $32. Let's see where Facebook was trading at March 14th. Facebook was double the price it's at right now. Now, I'm not sure Twitter would have had the same deal as Facebook, but let's see where Snap was on March 14th. Snap was 3 times the price that it's trading at right now. These aren't the same, but yeah, Pinterest is going to be a different deal. But you can see how Facebook, right, Meta, and Snapchat are either half the price or a third of the price it was trading at. Twitter was trading at $32 at that time, which would mean that it could either be trading at $12 like Snapchat percentage-wise or $16 for Meta's conversion-wise. And again, but nonetheless, it goes at $54.20 because that's the deal, and that's why Musk fought it so hard, man, because he overpaid for that. But nonetheless, he's not the only one that overpaid for it, as he has investors as well, and we're going to see how it plays out. And he's going to hit the ground running, man. He's not going to waste time with that acquisition, that's for sure. So we'll see some headlines coming pretty quick. But it's a private company, so that's the deal, folks. I'm always out here, saying the things Elon does when he talks about Tesla, when he overpromises about Tesla, right? When he tweets out that he's taken private at 420, basically illegal. I don't know whether the criminality of breaking those regulations, and is that a criminal nature or what it is, right? It's probably not. The SEC's coming after him. He had to pay his fine. He did whatever he did. But it's not appropriate because when you come to the public for money and you become a public company and you allow people to buy your shares, you become accountable to the laws and regulations that make those markets fair and equitable, right? So that's all fraud, and it's literally fraud, okay? And even the way he came after Twitter, not disclosing his position until later, and doing all this stuff, he should have had to pay more money for that company, folks. All right, he didn't disclose it. That was the regulation. He didn't disclose it. The people who sold to him when he was making his first purchases, all right, were unaware of material information that Elon was supposed to disclose by law. But guess what? That's a public company. And now Twitter's going to get a lot of headlines, but that's a private company. And that's a big difference. Everybody, likes to say, well, he can do what he wants. He owns that. He owns that. You're accountable to public shareholders, folks. You, me. There were people that were harmed by Elon when he didn't file that. There were people harmed by Elon when he tweeted out taking it private at 420, doing all these things he does in the public sphere. Okay? So now he's going to get a lot of gripe for the things he's going to do for Twitter, but separate the two. Okay? Because private businesses, you have the right to do pretty much whatever you want to do. So I want to draw that distinct line because you're going to see it merged a lot when Elon does whatever he does with Twitter, man. Into the people working there, that's a tough one. Anybody losing their job, and there's already the execs losing their job, man. That is a tough one. But that's what happens with a private company, man. So separate the two in your minds, folks, okay? Because you're going to see them kind of merge saying, what's he doing with this company? It's a private company, man, and that's the deal. They bought it for tens of billions of dollars, and now they get to do what they want with it. They could just close it down if they wanted to, and you couldn't say anything, really. That's not fraud. He bought the business. That's it. Versus a public company, man, he's been out there committing fraud with his headlines on shareholders for years and years and years. So, as my dad was saying last night, I wouldn't doubt him either, man, on those Twitter shares. Wouldn't trust him? No way. I wouldn't doubt him either, man. Brilliant man, successful on changing the way the world moves forward, which is pretty cool. How about this market moving forward? Stay tuned, folks. All green. We'll be
You
right
might
back.
think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. When you saw the Amazon numbers last night, when you saw the Apple numbers, did you think the Qs would be up 1% by 12 minutes into trading on Friday? Don't think you know everything, folks. Pretty resilient market in a big way. We jump over to Apple right now. We're up $6.56, man. Apple clawing back all the weekly losses, basically, to where we were Tuesday evening when Google and Microsoft started the FANG stocks to the downside. We have the S&P's up by 28 points right now. That's 0.7%. NASDAQ 100 leading the way. Above that, up by 1%. The Dow's up 1.2%. You could say actually leading the way in the Russell. They're already 1.1, 1.1, 1.2, and the S&P up 0.7%. Jumping around to some of the oil stocks, as I talked about. Chevron, $11.2 billion quarterly profit. Yeah, how about it, man? That's $5.78 a share versus $4.86. The market can't even keep up with how much money the oil and gas companies are making. Its oil and gas business posted an operating profit that surged 81% to $9.3 billion, and the refining business nearly doubled to $2.5 billion. We jump over to CVX. And they're up 1%, but they give back some of those gains. Exxon had big numbers as well. They're up 1.3% so far this morning, but they can't match what the market's doing right now, man. Pretty resilient right out of the gate. Apple up 4.6. We did have Amazon hit 100, and it's above it right now at 123, man. The day is young, as our man Basil Chapman would say, man. We're only 13 minutes into the trading day. Where are we going to go from here? Let's check around the commodities. Crude sitting about 88.20 right now. We get the gold contract off $15 right now. Yields, we're at 111.08. Where's that put us? Probably right under 4%, I think, as we've been oscillating kind of right near that area. Yeah, we're at about 3.98% right now as we jump around the 4% yield on the 10-year. VIX through the floor, 26.68. Not exactly the floor, but check it out, man. You put the VIX on a daily basis, right? Just back it up to this year from January. Pretty well defined. Each time we've seen a couple tops too. Check that out, right? You've never just seen that one bar. We've always seen a couple days across, maybe a few more than that. This time we chopped around between about 32 to 34. You got two tops, one September 28th. You got the next one October 12th and October 11th. Since then, we get the VIX from 34 to 26. Now keep in mind, where's the low? Where have the lows been? Well, we've got a couple lows in the VIX in May and in June, where we've seen some spikes, and the lowest we've gotten, though, is at about 20 in April and in August. Not sure we have that type of a run in us, but boy, it's been quite a run right now, as we are looking at, folks, one green bar in the VIX going back to October 12th. It's going to be October 31st on Halloween when we come back on Monday, man. Volatility getting sucked out of this market, and maybe that's indicative of a Fed approaching the end of their hiking cycle. With that, we jump to the next story I want to talk about, man. Talking about what are economists looking at for the Fed? Well, they're looking at 75 basis points coming down the line next week. That meeting ends Wednesday. We get an announcement at 2 p.m. Wednesday. Press conference, 2:30 Eastern time Wednesday. They see a 75 basis point hike and then slowing. 3/4 say the Fed will err by doing too much, okay? Now, if you really want to get inflation under control, that's probably what you want. Now, look at where we are here. Now, the Fed forecast released at the September meeting, okay? This is the September survey, show rates reaching about 4.4 this year and 4.6 next. The red on this graph here, okay? Can I expand that out? Maybe I can just blow it up a little bit. There, we'll make it a little bit bigger, at least for clarity. The red on this chart is the September Fed survey, okay, the Fed forecast. The blue is what the economists, is that right? Oh, no, okay. This is the September survey of economists, excuse me, versus the blue as things have ratcheted up here. Pay attention to the blue because that's what they're looking at right now, okay? In November, you're going to 4%. December, you go to 4.5, so that'd be 50 basis points in December. And then there's some talk of 25 and done, right? Well, that's not what they see, man, because they're talking about going to 4.8 and then going to 5. So that's another 50 basis points by March. So it'd be 75, 50, 25, 25, or 75, 50, 50, and then flat. But nonetheless, they see it flat March, May, June, and then we're going to trail off. But look at the trail off. The trail off gets us from 5 in June, okay, of 2023 to 4 in a year, and then down to 3 in the next year. That's not that bad, man. You know, I think the market would be very happy with that. Let's put it this way. If that is the progress, even if it takes us that time, June 2025 is 2.5 years away. But if we get to where we're going to be and the hiking is done by March, it's going to be November soon. Be prepared for the market to begin pricing that in, as it may be right now, man, because market likes to look 3 months ahead, maybe 6, okay? Looks further than that, but it stays pretty current. And if we're going to complete, I mean, this could be the last 75 basis point hike coming up. Think of that. We just got the PCE pretty much in line. It's going to be important that we start showing numbers on a yearly basis that are below 5%, right? Which is what that PCE just put up. 5% on core, and I think 6 point something on headline. And that was 5.1 or 5.2 for the year on core. 0.5% on a monthly basis, though. You annualize that, you're at 6%, okay? And the headline number was 6-something% on the annual basis. But the headline number on a monthly basis was lower because energy is doing some crazy stuff right now and food as well. But the VIX is speaking, man, and we'll see where we go. The numbers are going to get important as we go. The Fed, pay attention to whatever they say, folks. 75 is going to be the deal. Is this the last 75-point hike that they come with? I don't know. It's going to be interesting to see what they say because there's a lot of talk out there right now about them beginning to pause. That's been what's accelerating that market a bit, and we'll see if they get there. But interesting to see it when you put this thing on. We get to 5, and then guess what? Over the course of a year, we're at 4. Over the next year, we're at 3. And yeah, it's going to take some time, folks. It is going to take some time to get inflation under control. It's not going to be a shift in 30 days. We're seeing it as things are happening month over month over month over month as things continue to repeat. All right, what else do we have up here to talk about? Let's take a look at some of the stocks as we jump into this next break right now. We'll jump over to Tesla, see how they're trading. Yeah, the market. The market's a little worried, man, about Mr. Elon Musk and his adventures with Tesla, down 1.9% on the open there. See how Amazon is pricing, holding above 100 for Amazon, still down about 10%. Apple shares up 4.2%, sitting above 150. Pinterest had their numbers up 14.3. How about Shopify yesterday, man, on their acceleration? Shopify gives it back a bit, some volatility. They're down 2.2% for Shopify, but boy, this thing was trading at 29. Going into their earnings, you're still trading above 33 right now for Shopify shares. Check out the oil stocks with Exxon holding the gains up 2.6. Let's see how the banks are trading today right now. JP Morgan up about 2%. I saw something that JP Morgan, for the first time since 2015, is worth more than Meta market cap wise. And let's see, they're at 366 billion right now, JP Morgan, and Meta shares. Oh, geez, 268. I guess that was quite a fall off that they just had on that demise from 130 down to 96 yesterday. Yeah, talk about not even close, man. Pretty remarkable. Stay tuned, folks. S&P's 3844. We got the NASDAQ 100 up by 77. Dow up by 1.2%, pushing highs for the week. One more segment, folks. Stay tuned.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps up 29 points. We got the NASDAQ 100 up by 94. We got the Dow up now 400 points. We're right near session highs. We were just at 32,500. Folks, last night on that number, we were at 31,900, 600 points, and we were at that area again at about 3:30 this morning. You see the volatility on the 8:30 CPI number there, and boom, we accelerate higher in a big way. All right, jumping around to some of the other equities. Yeah, we had Intel with their numbers last night. They're dramatically higher, up 8.5% for Intel shares. In terms of Intel, so they cut their full year sales forecast, but they beat on the top and the bottom line, and they said they're going to focus on cost reductions out there. You got T-Mobile putting up some big numbers, man, in a big way. Up 6.2% on their numbers. Verizon getting a little bit of a lift there, up about 3%. AT&T up 2.1% right now. What else we have? We check in Pinterest, how they're trading, pushing highs 14.5% to the upside. We check in on Apple shares, up by 4.4%. I mean, these moves, man, Apple's above where you remember we looked at the move. Apple was talking about maybe a $5 move implied. You're up $6.38. Amazon sitting right at about $100. Our man Basil Chapman, he loves those round numbers, man. I'm sure he'll be talking a little bit of Amazon when we get back, folks. When he kicks off his program at 10 o'clock, Amazon sitting right at 100. Let's see where Amazon is, as you're going to be probably back above $1 trillion, right? Where are you at? Yeah, $1.01 trillion. $1.01 trillion, man, but might be higher by the end of this day with the way this market's trading, man. We got highs for the week, folks, on Wednesday at 38.97. We are now trading 90 points where you were last night at 4:30. We are now trading 70 points from where we were at 37.80. I mean, folks, is that right? Yeah, this market was negative by 40 points, the S&Ps. At 4 in the morning, we are now positive by 30 points. My dad was talking about yesterday, you can trade this market two ways, man. No matter what, folks, keep your stops in play. Appreciate you starting your Friday off with me. It's going to be a wild one in the markets, folks. Stay tuned. Basil Chapman's up next. We got our man Steve Rhodes at 11. We have Fast Market at 12. We got Larry Pesavento at 1, Dave White at 2, and Tom O'Brien, my dad, live from 3 till 4. Thanks so much, folks. Have a great weekend. Have a safe weekend. Stay tuned for Basil up now.